AstraZeneca, similar to Bristol Myers, from the perspective of a lot of the chart setups that we've shown you, really kind of oversold heavily on both weekly and daily time frames. And we were looking at that potential oversold levels to provide a bit of a bounce opportunity. So far, we've gotten a little bit of a move here, which is nice, but it trades at a pretty significant discount relative to its peers as well. About right now, about 10% discount relative to its peers. It is expected to grow significantly faster than its peers as well. It is slightly more profitable than its peers. So the fact that it trades at about a 10% discount, I think represents a pretty significant upside opportunity from a fundamental perspective. And then technically speaking, you have this kind of classic head and shoulders top that turned into a pretty significant sell-off. And now that sell-off has reached kind of that neckline level, which provides that potential bounce opportunity. It's exactly what we're seeing here right now. This might not get much further than that 72, 74 here level here to the upside, which would then represent, a valuation that's in line with the rest of the industry, but that would still be a nice move here to the upside for AstraZeneca at the moment. Adobe is one that we really like here as well in the AI space. There's certainly some challenges here, but Adobe, after kind of trading in a fairly wide range here over the past year or so, started trading near the bottom end of the range. That's when we started adding the stock back to our portfolio. It's had a nice move here to the upside, but it's pulled back a little bit here. So it's struggling to kind of get its way back up, but our upside target here remains into that 560 level here to the upside. And if you look at the valuation, it continues to trade at a discount relative to the industry, even though it's expected to grow either in line or faster than the rest of the industry. But it is far more profitable than the stocks in the software industry. So for those reasons, I think Adobe deserves to trade at a slightly premium relative to the industry rather than a discount that it does here right now. And that would align back into the high 500s here to the upside for Adobe, currently trading around 515. So this is one that we continue to like. On the flip side, for bearish ideas, Caterpillar is one that we also have been eyeing right now. If it trades back above, call it 420 or so, which was kind of the highs here from a couple of weeks ago, that would invalidate, in my opinion, our bearish thesis from a technical perspective. But from a fundamental perspective, you can see Caterpillar is trading at a relative premium to its industry. We're talking about 80% higher than its peers from a valuation perspective. And, the EPS and revenue growth is a little faster than its industry, but, we're talking about numbers that are well below the S&P 500 average in terms of EPS growth and revenue growth. Net margins are strong here, but, is that enough to justify an 80% premium relative to its peers? I think that's stretching it a little bit, and that's why I think the stock trading near all-time highs, with those types of valuations, there are some downside risks to those valuations, especially since, as you can see, as it kind of makes new highs, relatively speaking, it's kind of making lower lows relative to the S&P 500. So those are some signs that these recent highs are not necessarily sustainable, and we might see a bit of a pullback here for Caterpillar. But this is one that we recently just added. But like I said, if we get back above 420, I would say we would have to get out of this particular trade. ADI, this is one that we have taken also a bearish position here in this particular space. Even though it's still working its way, it is still continuing to trend in the right direction here for us. As you can see, it continues to trend lower here. The relative strength to the S&P 500 continues to deteriorate, which kind of gives us that bearish thesis here for the stock from a technical perspective. And if you look at from a valuation perspective, we're trading at a very significant premium relative to its industry, even though it's expected to grow just a little bit faster and it's not as profitable than its industry. I think the fact that it trades at such a heavy premium relative to its industry, nearly 50% premium now, I think gives the downside risk here that we continue to see, especially on a stock that is actually continuing to decline. In terms of revenue growth and EPS growth, it's actually negative here for ADI. So, when you have an industry that's struggling in a particular sub-industry that's not particularly popular. ADI doesn't do AI related chips or anything like that. So the fact that they continue to see revenue and EPS decline, I think, is a risk here for ADI going forward. And then Apple, my thesis here for Apple, I remains very clear on my thesis here for Apple. iPhone 16 sales have continued to struggle. Apple Intelligence has really struggled here. But I will say from a technical perspective, if we get back above 237 here, which we're knocking on the doorstep for that, I would certainly get out of this, because if we break out above 237, technically speaking, this starts to look fairly positive here. But I still continue to struggle significantly with the valuation. We're talking about a valuation that's more than 50% premium relative to the industry, even though EPS growth is expected to be virtually in line, revenue growth is expected to be in line. Net margins are much stronger than the industry average, but if you look at the outlook here for Apple, which most of their sales comes from iPhones, we continue to see that struggle. Their next big vision, which is Vision Pro, has really struggled with sales. It's failed to attract developers, and we're seeing multiple competitors come up in this particular space, namely Meta and Snapchat, that have seemingly given demos of products that are potentially leaps and bounds ahead of Vision Pro, at least from a usability perspective or commercial viability perspective. So for those reasons, I think that Apple is at risk trading at these huge multiples that it continues to trade at. And, the iPhone sales and net margins, I just think are starting to become less and less of ability to continue to hold on to those valuations. So that covers what I wanted to share with you here today. Like I said, I apologize for the bit of delay here, the cutoff here in the middle, but with these Monday morning sessions, I want to focus more on these ideas and presenting these ideas, make sure that you have, an understanding of these setups, because these are the ones that we pull from throughout the week to present options ideas on. So I want to make sure that you kind of start your week with a clear understanding of what our views are for the stocks that we are looking at and the ones that we're likely going to enter an options position here throughout the week, so that when we do send you a signal with a bullish or bearish idea throughout the week, with an options trade, you're already versed in the specific name and the specific idea that we're looking at from a technical and fundamental perspective. And perhaps you're just evaluating the options trade before you go ahead and execute that trade in your account.